Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of business and finance. And let me tell you, Icon PLC's latest filing has some interesting stuff in it, specifically when it comes to their financials and a pretty significant Goodwill write-down. Before we dive in, if you love getting the real story from these thick corporate reports, make sure you are subscribed. And hey, we have a fantastic community brewing over on Discord. All the details are in the description below, so come join the conversation. Alright, so this report is from Icon PLC, a contract research organization that helps pharmaceutical companies with their drug development. Think of them as the behind-the-scenes wizards making sure clinical trials run smoothly. They've released their 6K report, which is essentially an update for the SEX. Let's jump right into the numbers. Looking at their balance sheet as of the 30th of September 2025 versus the end of 2024, we see some shifts. Total assets have decreased from about $16.9 billion to just over $16.5 billion. Now that might sound like a lot, but it is not necessarily a bad thing. A big chunk of their assets is something called Goodwill. This is an intangible asset that often comes from buying other companies. Their Goodwill has gone down from roughly $9.1 billion to about $8.9 billion. And in this report they explain why. They took a non-cash Goodwill impairment charge of $165.3 million. This means they revalued a part of their business, the Data Solutions Reporting Unit, and decided it was worth less than they originally thought. The filing says this was mainly due to tough economic conditions and revised expectations for that part of the business. It is like realizing the antique vase you bought isn't as valuable as you assumed. Now let us look at how much money they are actually making. For the 3 months ending the 30th of September 2025, their revenue was just over $2 billion. That is a tiny increase of 0.6% compared to the same period in 2024. It might seem small, but growth is growth, right? However, when we look at the 9-month period ended the 30th of September 2025, revenue actually decreased by about 2.9% to $6 billion compared to over $6.2 billion in 2024. They blame this on market volatility. Their direct costs, which are things like investigator fees and salaries for project staff, have gone up by 3.5% for the 3-month period. As a percentage of revenue, these costs have also crept up from 70.9% to 72.9%, which means a larger piece of their incoming money is going towards these direct expenses. Selling general and administrative costs, those are things like non-project staff salaries and office expenses, decreased slightly by 3.9% for the 3-month period. This is good news as it became a smaller percentage of their overall revenue, going from 10.1% down to 9.7%. Depreciation, which is the cost of using up assets like equipment and facilities, has increased by 13.7% for the 3 months. This hints that they are investing in more assets to support their operations. Amortization on intangible assets, those are things like customer relationships and technology, has stayed pretty much the same for the 3-month period. But it has decreased quite a bit for the 9-month period. This is because some significant intangible assets from a past merger are now fully amortized. That means their cost has been spread out over their useful life and are no longer being expensed. They also incurred significant restructuring costs of $82.3 million for the 9-month period, which is a notable increase from the prior year. This is mostly due to workforce reductions and office consolidations. It signals that they are trying to streamline their operations. And of course we have that $165.3 million Goodwill impairment charge we talked about earlier, which shows up here again as a significant expense for the 9-month period. Putting it all together, income from operations, which is what is left after all those costs and expenses, has taken a pretty big hit. For the 3-month period, it dropped a massive 69.7% from $285 million to just $86.6 million. For the 9-month period, income from operations also fell by 35.6%. This is largely due to that Goodwill impairment and increased restructuring costs. Interest expense has decreased, which is generally a positive sign. For the 9-month period, it went down by over 20%, mainly due to paying down debt and lower interest rates. Now, income tax expense is a bit of a mixed bag. For the 3 months, it dropped slightly, but their effective tax rate jumped significantly from 16% to almost 94%. They say this is largely due to the Goodwill impairment charge, which doesn't get taxed but messes with the effective rate calculation. For the 9-month period, income tax expense fell more dramatically, which was helped by releasing some provisions for uncertain tax positions and a deferred tax liability release. This all trickles down to net income. Basic earnings per S-share for the 3 months ended the 30th of September 2025 was just 3 cents compared to $2.38 in the prior year. For the 9-month period, it was $4.29 per S-share this year versus $6.43 last year. That is a pretty steep decline. One interesting thing they mention is their share repurchase program. They authorized buying back up to $1 billion worth of shares in February 2025 and then another $500 million in July. They have been actively buying back shares which can return value to shareholders when done wisely. They bought back quite a few shares in March, June, August, and September of 2025, totaling over 4.5 million shares for about $750 million. Now, for some legal drama, Icon and some of its top executives are being sued in a class action lawsuit. The accusation is that they made misleading statements about the company's financial performance and future prospects. The company is fighting this vigorously and intends to file a motion to dismiss. This type of lawsuit can be costly and distract management. In their outlook, they mention that actual results may differ materially from their forward-looking statements due to risks and uncertainties. They specifically call out potential loss or delay of large contracts and impairment of goodwill and intangible assets as significant risks. They also point to dependence on the pharmaceutical industry competition and regulatory changes. So what does all this mean for Icon plc? On one hand, they are still a major player in the contract research space with a large global footprint, and they are actively managing their capital structure through share buybacks. However, revenue growth has stalled and even dipped in some periods, and the significant drop in profitability for the year is concerning, especially with that large goodwill impairment. The lawsuit is also a cloud hanging over the company. Overall, Icon appears to be navigating a challenging market and dealing with internal restructuring. The goodwill impairment suggests a past acquisition or segment is not performing as expected, and they are recalibrating. The legal challenges add another layer of uncertainty. We will need to watch closely how they manage these headwinds, and if they can reignite revenue growth and improve profitability. Alright, that is our breakdown of Icon. Filing, what is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.